Hello everyone. Let's take a look at options. You want to make it big. You want to make money. You want to make money in the stock market, right? So how do you make money in the stock market? It's very easy and it's very complicated. But let me show you the potential. Let me show you the power of options as long as you understand what's going on with Tesla or with other names. And I think the interesting part about options is that you need to understand the name. You need to know, like they say, you need to understand the credit, but also you need to understand how the name trades. What does that mean? Well, take a look, for example, right? Tesla is at 251 and it was up 12 points today and it went up 5%. 5% in one day, that's not too bad, right? I mean, if it keeps on going every day like that, why not? For a day trader, for you to make $100, at $250, it went up 5% in one day. All you need to invest is what, $2,000, right? So if you would have invested $2,000 for 5%, that's $100. So yesterday you could have bought so many shares for $2,000, and today you would have made $100, just like that, and you could have sold it. And nowadays, you don't pay commission, so that's fantastic. Well, sure, but you have to do it again tomorrow and the day after tomorrow. And this is where it becomes very complicated. So, any day traders out there, you really need to understand what you're trying to accomplish. Now, let's go back to options. Let me show you how much money you could make with Tesla in one day if you were to buy options. Look at this, right? So this is basically, we're looking at calls. So here we are bullish. We will make money when the stock goes up. How much money can you make? Well, the way an option works is very simple. It basically gives you the right, not the obligation, to buy the stock at a predetermined strike price. And once you hit that strike price, you could exercise the option. Meaning that you could buy that option, that price, that stock at that particular price, and you will be able to make money. So let's take a look at it. Let's take a look at this little baby, right? So what do we have? Look at this carefully. Look at the strike price. So this basically tells me you have the right to buy this stock at 75. Well, you cannot exercise at 75 because it's at 251. Well, you need to be able to have a strike of 75 for you to be able to actually buy the option. Okay, so you cannot exercise this option, and that's why it is worth nothing. Now, at some point, it starts to take on value, about like $130. So that gives you the option, but not the obligation to actually exercise and basically, sell at 130. The thing is, why would you sell at 130? Now, let's keep going. In fact, let me do something for you. Let's call in our friend ChatGPT and ask it, what is an option? A call option is a financial contract that gives the holder the right but not the obligation to buy a specific amount of the predetermined price, known as a strike price, within a specific period of time. Here, the key component and feature of the call option. You have the underlying asset, you have the strike price, and expiration date. So the call option. How a call option works. You're buying a call option. When you buy a call option, you are purchasing the right to buy the underlying at the strike price before the option expires. You pay a premium for this right. If the price underlying asset rise above the strike price, you can exercise the option to buy the asset at the lowest strike price, potentially making a profit. And if you're selling an option, it's the other way around. So let's just focus right now on the buying of a call option. Okay. As you notice, right, it's the option. You are purchasing the right to buy the asset at the strike price before the option expires. Okay, and you pay a premium for this right. So when we look at Tesla, look what happens in terms of some of the profit that could be made. The strike price of 130 is 8% in one day, 12%. The higher the strike price, 23%, 26%. There's some trading going on here because you could see this is a volume. And look at the most active options, 26%, 28%, 35%, 45%. One day, 90%, 66% in one day, 73%. You could go up to 100% in one day. 100% in one day. We're talking real money here. Right? So if you do it right, if you know how to, which options to buy, you can make a lot of money. The only issue is that you need to know exactly, because keep in mind that this is the expiration of the option, July 26th. So not only must you know where the option is heading, the price of the stock, but you got to know by when, which is it's a pretty difficult thing to do, and do it every time. But if you get it right, as you could see, we're talking 100%. 142% this option here, the right to with a strike price of 330. 100%. One day. These are real numbers. Okay. Of course, what you can do is you could say, well, is this what's going to happen tomorrow? Now, the reason why this is happening, this is happening because if you go to the news section, look what's happening. Tesla earnings is a watch for full self-driving info. So if we look at the news here, we see that we'll release its second quarter earnings after the market tomorrow, on Tuesday. There will likely be some focus on Tesla full driving technology. EV maker plans for a robo-taxi. The vehicle was supposed to be unveiled in August, but CEO seemed to imply its unveiling may be delayed. Managing director tells market that among the things you'll be watching for is the company's margin outlook and insight on its earnings storage business. They are really important because of us. Robotaxi ever happens, we'll have to figure out what the consumer appetite is for the full driving offering that they're available for them today. So there's a lot of question around this name. What is the company going to do? How much is it going to cost? Is it going to be profitable? Let's see. But in the meantime, if you go back to the options market, you could see the potential. Now, of course, if you look at instead of July 26th, you say, well, what about August 2nd? When August 2nd, the numbers are a little less strong because obviously, the maturity is further backdated, but still, there's a huge, it's still 69. But don't forget, you got a couple of days here. Now, if it keeps going like that, it keeps going higher. Let's say if we do, what about the options sometime in August? Well, obviously, the further you are out, as you could see now, 25%, 30%. It's still decent money, in one day, 30% compared to the stock price. Remember, the stock price went up 5%. These guys went up 6 times the stock price. Looks interesting, right? So then if we go further in time, because you could go, because this is a very tradable name, you could, hold on, sorry about that. If I go in 2025, a year from now, you could also buy an option a year from now. Well, now the numbers are, not as strong, 11% in one day. So basically, you're basically more or less maybe double, or it kind of matches the 16%. So you're still up, 3 times the stock price. So it's still good. But I mean, you have more time to be wrong, or to be right. So that gives you more time, but obviously you pay through the. So basically, the idea is the shorter the duration between now and the expiration, the more volatility you will experience. But if you're betting the right way, because betting is kind of the word here, I mean, usually people don't exercise the option; they just trade it for the spread, and they unwind it, and they book their profit. But that's how you could make lots of money on options. Of course, you could say, well, let's go even further out, right? Let's go in 2 years from now, in June 2026. We're still up 10%. You literally double what you have. Now, why do you want to go so far out? Well, because first of all, what is the cost of that option if you were to buy it today? That option in let's take a look at, for example, the option let's take a look at the 400. So it's an easy number to remember. So the 400 option in July 20 today, but expiring July 2026, 2 years from now, the 400 is at $46. Okay, so you have to pay 46. You buy these in 100 shares increments. So it's going to cost you $4,600. Of course, you're going to say, "Wow, that's a lot of money," but you have 2 years to exercise. Now, if I were to look at the option today in, let's say, this is not easy to see, but like let's take a look at, in 2024, as you can see the date here, the cost of that option is almost at the 400. Right, the 400 will cost you. It doesn't cost you much of anything, and it doesn't do anything because there's no way you're gonna get to 400 in a couple of days. Right, so that's why it's not worth anything. No, the one that's at 3 Venny, it's very, very cheap option. So the options are very cheap. Right, 3 cents an option, and if you're correct, you can make 100% very easily. See the thing? So you will pay a lot for it in the future, but you have more time for it to grow. So the idea is, where is the stock going to do? What's going to happen to Tesla? Now, if we look at the financials of this company, frankly, I mean, if you look at we have 5% today. That's a lot. That's a lot. So in conclusion, Tesla is up 5% for one day. But with options, you could literally, if you take a 2-year option, so you give yourself plenty of time just in case you're wrong, you can make 10% in one day by a 2-year option. Now, of course, you could buy the option, right? And you might not be correct because, don't forget, there's a reverse to that, right? If you bought a put, look at the losses that you're taking. You lose half of your money. Okay, in one day. So you got to be careful also. So red the puts are red when the stock goes up, and it will be the other way around. So the thing is, this is a complex issue because you really need to know how these things trade out of each option trade. The stock is okay. It's just that the profits are not. I mean, the benefits are not there. The issue, of course, with trading options is, but you got to be right all the time. Every single time, and that's complicated. So what's going on with Tesla? Well, let's take a look at the latest news. The idea is we need robotaxi and we need them now. Tesla stock price plummet proves it, right? So what do we mean? Well, it means that Tesla has the world buzzing with excitement over the announcement of his new robotaxi. Why? What does he need to come up with something? Well, he needs to come up with something because he's the number one. It's the number one producer of electric vehicle. So how many more can you build? I mean, you have 50% of them are Tesla. You need to come up with something else. Why do you need to come up with something else? It's very simple. Take a look, for example, at the statistics. If you look at the statistics, you will see that the stock is the P ratio is pretty high. Right? So let's take a look at the Tesla. Let's go back and forth here because we're learning. But basically, if I look at Tesla and I look at the statistics, well, it's not the statistics. It's on the summary. Right, if I look at the summary, you will see that the beta of this stock is 2.3. I like that because it's volatile. See, in options, you could be making money both ways, if the stock goes up or the stock goes down. But I would say, if you're going to get into options, I would suggest strongly that you do it slowly. You understand what's going on. You take it easy. You see how they trade, and don't panic. And don't invest too much money either, because this thing is extremely volatile. But the point is, you're looking at a company with a beta of 2.3, which means it's extremely volatile. It goes, if the market goes up 1, they go up 2.3. Imagine. And the P ratio is pretty high already. So that means lots of people have been buying the stocks. But when you look at historically what's going on with the stock of the past year, it'll be great to buy call options. Yeah, imagine if you bought in April, the stock was at 143, and now the stock is up in the past 6 months is up, about 3 months is up 71%. You could make a huge amount of money here. And don't forget, when I say it's up 100%, it's one day. Maybe the day before it was up 100%. So if we let's put it this way: if it's up 5%, right, and we're seeing up to 100% for the month, for the day, and if the stock is up 5%. And this thing is up 100%, it's 20 times. So if this thing is up 71%, 2 times 70% is 140, and out of zero is 1,400% in 3 months. That's good return. How do you think Spitznagel made 4,000% when COVID hit on his portfolio? Right? You buy it all the way down here, and you buy a call option expiring in July, and this is April. Look at that. Yeah, you make 70% with the stock price, but you make 1,400% with the options. What is 1,400%? I don't know. Let's say you got $2,000. You say, hey, let me try $2,000 in option expiring 3 months from now. $2,000 times 1,400%. Right, so 1,400% is exactly divided by it's 13 times. 2,000, right, times $2,000 times 13 times. That's $26,000. $26,000 divided by 2,000 equal times 100 minus 100. Yeah, it's about 1,200%. So basically, by investing $2,000, you're getting something like 13 times, $26,000. That's serious money. Of course, you had to know all this ahead of time. Everybody's going to go out and buy the stock now for expecting tomorrow. But of course, if you are wrong and this thing doesn't go anywhere and it goes the other way, then you could lose the $2,000 very quickly, and it's gone. Well, with the stock, even if the stock is down 20%, you still own and it goes on forever. So that's a decision that you need to make. So what's going on in terms of financial? Can we get some comfort around the financial for this company? Let's see. Well, I mean, the company as a stock is not going to disappear, right? At some point, you'll make some sort of profit because look at the EBITDA, look at the cash flow, right? So we're at from 4 billion, 9 billion, 17 billion, 14 billion, 13. I mean, the company's making money. The company's not going to disappear. It has almost no interest expense because if you have interest expense and you have to pay the bank and you can pay the bank, you go bankrupt and the stock goes down to zero. That's not going to happen with a stock like Tesla. It's gonna exist. The trick is you want to make money, and you don't want 5%. You don't want 10% every year. You want 1,400%. And don't forget, 1,400% in between April and July. Is like 3 months. So it's really, technically speaking, annualized is 1,400% times 3. So it's 4,000%. And that's exactly what our friend Spitznagel did. Right? Spitznagel and 4,000%. Look at that. Spitznagel did. He's been watching for Black Swan. And that's what he's looking for. The hedge fund who's been watching for Black Swan for decades is the greatest credit bull is set to pop, but he's not worried. Now, this guy who made 4,000% is worried. I mean, he'll make it, but because of what he did, because basically what happens is he bought options, long-dated options. Now, of course, who's going to buy long-dated options? Because you could be waiting for you to make money because you're out of the money. You're not really making money until it becomes in the money. And who wants to wait? Who wants to wait that long? Anyway, so if we look at the financials, how is the company doing? The company is doing great. I mean, the thing is, the market is expecting a lot from the company. It's expecting a lot of news. It's expecting where's the growth going to come from. If you look at the Tesla earning, robotaxi, well, we need them now. Tesla plummet proves it. What does that mean? Well, it means that the company needs new sources of growth. Where is the growth going to come from? You need growth. If you don't have growth, then the P ratio for which you paid for, they're going to look at it. They're going to say, well, you know what? There's not enough growth, so you're gone. So I don't know if you feel that this robotaxi business is not going to work out. Let's ask ChatGPT. What is robotaxi from Tesla? Because now, with ChatGPT, makes it easier, right? So basically, robotaxi, autonomous rail ride-hailing services that leverage advanced self-driving technology. So what does that mean? It means that full self-driving software is designed to handle complex driving tasks. Neural network and AI. Tesla's self-driving capability are powered by robust neural network. Economic ride-hailing service similar to Uber and Lyft. And we know what happened to Uber and Lyft. What happened to Uber and Lyft? Let me show you. Look at the potential here. Uber technology. How much money can I make on Uber? Well, right now, the past 5 days, it's up 6%, 3 months. It's up 2%. I mean, down 2%. 6 months, up 4%. Year to date, 10%. 1 year, 44%. 5 year, 56. About all time, 61%. So, not the greatest amount of money, quite frankly. Although if you had bought it here at 20, you have triple. So Uber is okay, but it's not. When did it start? Yeah, it started at 40, 660. Actually, I'm surprised. I thought Uber would be doing much better. But when you look at the beta, it's only 1.3 thick, so it's not as volatile as the other guys, as Tesla. I like Tesla because Tesla is volatile. You need volatility when you play options. Otherwise, it's not moving much. So what's the point? So what do we have here? We have let's see what this guy is saying. So basically, similar to Uber, Tesla Robotaxi aims to provide on-demand rides, but without the need for human drivers. This could potentially lower the cost and increase availability. Tesla car owners will have the option to add their vehicle to the robo fleet when they are not using them, earning money from every ride given. Whoa, the create a new revenue stream for Tesla owners. So basically you put your car out there and somebody calls your car and your car leaves your garage and or whatever, leaves your street and it goes over there. Whoa, that's a lot of risk now, right? I mean, suppose your car run over somebody on the way there. Are you responsible for it? The deployment will require regulatory approval from local and national authority. Tesla is actively working on meeting the necessary safety. The robotaxi will incorporate taxi suites of safety features. As Tesla Electric, the robotaxi will contribute to reducing carbon current, status, and future prospect. As of now, Tesla is continuously improving the technology. If successful, robot could disrupt the traditional taxi and ride service. What do you think? You really drive your Tesla? I have a Tesla, for example. I mean, yeah, it could be nice to make some money if you go and take my car and let the robot taxi take it away. I mean, the beauty of it for him is that you don't need to build any new cars, just you use existing fleets, which you're doing with Uber and that. But this is like one step beyond. Of course, you're gonna say no way it's gonna work. But what about Tesla? What about Uber? No, I want to take a taxi. When you get some guy that I don't know that's going to ride, yeah, it works with an iPhone, everything works out fine. So, but the thing is, that's the decision you need to make now. But you need to make the decision before it comes out. Because if you wait for everybody to say, it's working, it's too late. Now the P ratio is going to be tremendously higher. Right? What is a P ratio on NVIDIA? I believe that you should know two stocks kind of well and understand how it trades. Then you could see if you could make money. But NVIDIA, for example, P ratio, the beta is 1.68 and the P ratio is 72 though. Obviously a lot more growth pepped up into P ratio for NVIDIA. If I were to choose between trading option, I would trade option on Tesla because it's more volatile. Yeah, I know volatile means down, but it also means up. This guy, NVIDIA, again, 72. Don't forget, year to date, that thing is up, oh my God, 150%, 100%, 60%, 178, 2,000%, 282,000%. 282,000%, right? Okay, so here you are in 2020, right after COVID. This thing is worth $12 a share. Now, don't forget, you can't really go by that too much because there was a stock split from that time. But anyway, so 200 and let's say all time is really from 2000, the past 20 years. So 20 years ago, you put $1,000 and you're up 200,000 times. Right? 200 million. That's not bad. The thing is, you would have to know all these things ahead of time. Are you going to sit on this for 20 years? Nobody does that, right? Nobody does that. So that's kind of what's going on with the options. It's not an easy thing to comprehend. I'll give you a couple of examples here and there, but you need to figure out, where do you fall in this thing? Again, you need to understand how they trade. You need to understand the stock. And you need to make decisions. Of course, you cannot wait when everybody has made up their mind because it's too late. So remember, lots of money in option, 100%. Stock goes up, you could go up 20% in 3 months. Yesterday it was up 100%. But who's going to buy an option today right, for expiring 4 days later. You got to be courageous. And even if you're right, then you have to be right again and again. Don't forget, when you're wrong, you lose everything. When you're right, you're up 100%. So maybe it makes sense. So you lose with $2,000 and you make $2,000. Well, you don't really make $2,000 because then you have to pay taxes. So it's work, but it's potentially quite rewarding. So stay tuned, follow the process, understand Tesla, understand what's going on with options, and maybe, just maybe, you might making. So don't forget, subscribe and like what I'm talking about.